Boston has a riches of great television and radio announcers, and Stephen King, who's a huge fan, even wrote a book called "The Girl Who Loved Tom Gordon." He was a reliever for the Red Sox, and it's a story of a girl who gets lost in the woods, but she is comforted. She's like 7, but she's comforted by the fact she can listen to her little radio and hear WEI call the game and hear the great callers of the game. So it's a wonderful team. But people will jump through a lot of hoops to get a lower price. And in fact, I've heard a quote several times recently, which was, if you're selling underpriced auto insurance, even if you're in a dinghy in the middle of the ocean, people will find you and they will buy that underpriced auto insurance from you. We certainly have a philosophy that insurance exists to help you financially through things that would be catastrophic otherwise. And so there's a useful question to ask, like, I don't know, if someone was going to offer you locksmithing service, like, is that insurance? I mean, I don't think that's insurance. Like, insurance is your house burned down and I can't, I've lost this huge thing that I've invested in. What most people's interaction with home and auto insurance is you buy it because you have to. And then when you have a claim, you go, oh no, I don't know if I'm covered, but I hope I am. And like, yep. That's it. That's everyone. That's like everyone's experience with it. From our perspective at Branch, we view it as a defect if you call us with a claim and you thought you were covered and you aren't. So for us, like, we very much care about that interaction. If you look at what insurers spend to acquire customers, you have this terrible reinforcing problem in the US, which is that it's really hard to buy insurance in the US. Buy auto.
Now we are getting into the meat of the conversation. Okay.
Well, to buy auto and buy home is hard in the US. Buying a home auto bundle will take you 2 hours in most cases. It's hundreds of questions. You could even look at, Progressive, which has great, has a wonderful history in innovating in auto. If you go through their home auto bundle purchase, it'll take you like 15 minutes or so to get an auto quote, not bindable. It'll take you another 15 to 20 minutes to get a home quote, not bindable. And then they'll say, okay, well, we'll sell it to you. And then you can go bind the auto. That's another 5 or 10 minutes. And then they say, great, call us to buy home. And then that's probably another hour. That's it. That's like the state outside of Branch, which is name and address, the bindable price for home and auto. That's it. That's the best the industry has right now. And so this dynamic, though, the fact that it's so hard to buy means that they have to spend lots of money on advertising or on agents who then spend money on advertising in order to acquire a customer. And so this is another one of the great things that I don't think is well understood by analysts who look at this space, is to really think about how much is being spent to acquire customers. And I think there are 3 buckets of expense that acquiring customers come in. And I will tell you, basically no analysts, no S1s you've read have actually incorporated all 3 buckets. But you're absolutely right. And again, like, I think by being more intelligent about these things, I think it would be silly to ask a startup about their combined ratio, but I think it would be great to say, you targeted a 65 and you hit a 120. What happened? The most efficient insurers out there are targeting in the 70s. Again, let's go to Progressive, let's go to Geico. Where are they targeting? Why do you need more money? Like, isn't the point efficiency? Here, aren't you? Isn't the whole goal, well, you don't have like mainframes, so you get to operate more efficiently? When you spend whatever to get a customer. As soon as you get a customer in SaaS, your margins are such that every minute that customer is a customer of yours, you'll make money, right? Like, you want that. You're trying to make them a customer for as long as possible because it's just more money in your pocket. In insurance, if you misprice insurance, every minute that customer is your customer, they're bleeding cash from you, right? And it's a really painful leaky bucket. And you're regulated in a way that you can't just necessarily say, I don't want you as a customer anymore. I mean, the regulations will require you to not do that because that would be very disruptive to someone. If you've made an offer in insurance to someone, you're not allowed to just get rid of them because you were bad at your own financial plan.